See, the question here I am explaining you. Non-controlling interests and intra-group profits. So P company has owned 75% of shares of S company since the incorporation of that company. So P company holds 75% in S company. During the year to December 2002, S company sold goods costing this much to P company for a price this much. And you know, when there is a intercompany transaction, intercompany transaction between the parent and subsidiary, and there is a profit if they make, that is called as unrealized profit. I have already explained you this concept. Okay. So 16,000 worth of inventory has been sold by parent to subsidiary for 20,000. Now, and hello, yes.
Subsidiary is the seller, parent sir.
What?
Sir, subsidiary or the parent sir, seller?
Here, seller.
Yes, sir.
The seller is subsidiary. Sorry. No.
Oh, okay, sir. Okay, sir.
So the subsidiary is the seller to parent here, because here they have clearly mentioned S company sold goods costing 16,000 to P company at a price of 20. So subsidiary sold goods of 16,000 to parent for 20. Now, these goods were still unsold by P company at the end of the year. And you know, when the goods are still unsold, they have to be shown at cost. Okay. And when there is a transfer of goods between subsidiary to parent or parent to subsidiary, there is no profit, which is what is realized. So when they maintain separate set of goods, if S company sold goods to P company, S company will show sales as 20,000 and P company will show COGS as 20,000. Correct or wrong? Please tell me.
Yes, sir.
But for S company, the COGS was 16,000. That's a different case. For them, they purchased at 16, they sold at 24. They sold it for 20 to the parent. For parent, at what price the parent bought or purchased is COGS for parent, and they need to cancel it out, like in intercompany transaction. Okay. But what happens is, here there is an unsold stock case. So let's see. S company sold goods costing 16,000 to P company at a price of this, and these goods were still unsold. So when these goods, for example, if they say that these goods are sold, what did they say? For example, in the question, they would have told these goods are sold, then you need to cancel them. Are you understanding what I'm saying?
Yes,
Yes,
sir.
sir.
But here the goods are not sold. Those are still in the ending inventory or closing inventory of the parent company. Correct or wrong? So those goods are
Yes,
still
sir.
with the parent. So they need to show at 16,000, not at 20. And whatever the profits has been made of 4,000, that has to be deducted from the retained earnings. We already discussed this one. So the entry would be what? Debit the retained earnings and credit the inventory account. By how much? 4,000, 4,000. Is it so? Please tell me. Is it so or not?
Yes, sir.
So now this is the question in front of you. Can you do this question on your own? Please do the consolidation. See what you need to find.
Yes, sir.
Since there is a 75% acquisition of parent, since this is a 75% acquisition of parent, 75% acquisition by the parent of subsidiary, there is a goodwill case or not in this? Please tell me. There is a goodwill case or not?
Yes,
Yes,
sir. There
sir.
is goodwill case.
Yeah, so now you need to find out that one. Come on, do this. There's a goodwill case. Are you sure? When
No, sir. No goodwill is there.
But why? But why? See, there will be no goodwill case, na? The investment,
Because
yeah, the investment done by the,
and cost was same.
yeah, see the
Investment and share capital is same.
yeah, see, the investment done by the parent in subsidiary is at cost. How? 75,000 shares in S company is bought at what price? Please tell me, all of you. What is this?
75,000.
75,000. Each share in subsidiary is of what value?
$1.
One.
So in this 1,75,000 would be whose share?
75%.
And 25,000 will be whose share?
Share NCI.
NCI. So for 75,000 in subsidiary, the parent is paying how much?
75,000.
So do you think there is any case of goodwill here?
No, sir.
No, no additional payment is made. There is no case in this question or no such statement that parent has given the subsidiary shares are of $1 and parent has exchanged the subsidiary share with their own share which is trading in the market at $3 or $4 something. This kind of statement is not given. They did not say that the parent has acquired subsidiary at some higher value, or they are not showing some higher value also here. Am I right? They're not showing it as 1 lakh. Correct or wrong?
Yes, sir.
Yes, sir.
So when you are not making extra payment, then there is no question of goodwill. Correct? So now in this question, you should find out the unrealized profit treatment. Whatever is given. Yeah, you should. Yeah. So in this question, what did you do? You need to remove the unrealized profit from subsidiary companies' retained earnings. Correct? Why? Because
Yes, sir.
who sold the goods to whom? Subsidiary sold the goods to parent.
Subsidiaries would be
And
parent.
who has shown the profits in the books? Subsidiary. So who will
Subsidiary.
remove the profits from their books?
Subsidiary.
Subsidiary. So remove it.
Subsidiary.
Yeah. And inventory you will be showing at what? So where is the inventory?
Closing inventory.
We will see here.
We will deduct that 1,000.
Yeah. So here whatever the inventory total is there, we will remove 4,000 from here. Correct? All of you understood?
Yes, sir.
Yeah. And coming to NCI, we have to find out this treatment is done. And now coming to NCI part, please understand. The NCI is given at fair value in the question. So prepare the consolidated statement of financial position of P company at 31st December 2002. The fair value of NCI at acquisition was 25,000. So we will take 25,000. We took it here. And what is the retained earnings of the subsidiary? 60,000, correct?
Yes, sir.
And what is after adjusting the unrealized profit? What is left over? After adjusting the unrealized profit, what is left over?
60 minus 4,000 is 56,000.
Out of 56,000, 75% goes to whom?
Parent.
Parent. And 25% goes to whom?
NCI.
That's it. You got the NCI value. Okay. Now please do the
Yes, sir.
consideration part. Come on, do this question. Come on, solve it on your own. I'm giving you 5 to 10 minutes. Come on, fast. And after that, we'll tally your answer.
Total assets 3,75,000.
Yes. Liabilities also. Finish it.
Sir, once can you scroll up, sir?
Meghna, you're doing? Hello?
Yes, sir.
Okay, okay, Meghna. Yes, yes. Finish. We have to go for next question again.
Oh, just a second, sir.
Yeah.
Done, sir.
Yeah, yeah. So if done, then please go through the next question and solve that on your own. I'm waiting. Come on. Are you people trying?
Yes, sir.
Okay, okay.
Yes, sir.
Yes, yes. Hello, are you doing this?
Yes, sir, doing, sir.
Okay, okay.
Sir, goodwill is 15,000, sir.
Just a second, we'll tally the goodwill. Yes, very good. Excellent, excellent, excellent. Come on, yes, yes. That gives a good confidence that you're getting things. Now, please do the next part. We'll go for the next topic. I'm waiting, no issues. Take your time. Yes, what's the answer? Finished?
Yes, sir. 1,90,000 tally.
So 1,90,000. So goodwill is 15,000. Property, plant, equipment you have added, and current assets. What you have done?
Current asset is 55,000, sir.
Yeah, current assets. What they have investment 46,000 and 52,000. How much has parent acquired in subsidiary? 80,000. So 46 by 52 is how much? Can you tell me? Yes, 46,000 by 52,000. How much? Hello. Just a,
46 by
no, no,
52,
no,
0.8.
just a minute. This is parent company. This is subsidiary company's capital, and 80% of shares. So 80% of 30,000 is how much? 24,000. So this would be consideration transferred, okay? And
40,
what is the NCI fair value? The fair
9,000.
9,000. This is like how much they, because here you can definitely expect the goodwill is there in this question. Why? Because the ordinary shares of subsidiary company as per $1 each, the total share value is 30,000. Okay. In that, definitely we understand that parent has not acquired the entire share capital. They have acquired only 80%. And for their 80%, they are paying how much?
46,000.
46,000. So definitely there is a case of goodwill here.
Goodwill.
So 46,000 plus 9,000 your NCI and the equity represented by, yeah, and equity represented by the share capital and pre-acquisition retained earnings, correct? This is given to you in the question itself here. P company acquired 80% of shares in S company 1 year ago when reserves of S company stood at $10,000. So calculation of goodwill is done, and this goodwill intangible assets will come in the balance sheet. So you can see that goodwill here. Can you see the goodwill here?
Yes, sir.
Yes, this is done.
Yes, no.
And current assets. Let's see what about the current assets. I think there is a like exchange of goods. So during the year, S company sold goods to P company for 50,000. The profit to S company being 20% of selling price. So 100, like if at all they give in this way, this is the selling price minus 20. This is the profit, and 80 is your cost price, correct? And the goods are sold at how much? 50,000. So what is the cost price? 50,000 into 80 by 100. Can you tell me this is how much? 40,000. What is the profit in this? 10,000. Please tell me, all of you, did you get this profit 10,000
sir.
or not?
Yes, sir.
Yes. So here they have calculated that. Where is that? Unrealized profit. Yeah. So here unrealized profit. Can you tell me this is how much? Like 50,000 into 80 by 100. It's like 50,000. During the year, S company sold goods to P company for 50,000. The profit to S company being 20% on selling price. So selling price minus profit is cost price, and P company sold goods at this same price. So selling price is, so what is the cost price? 50,000 into 80 by, so it is 40,000 now. So from where they have, acha, okay. So the problem here is 10,000 is the profit. That's all right. But at the end of reporting period, 15,000 of these goods remained unsold in the inventories of parent company. So at the same date, P company owed S company 12,000 for goods bought, and this debt is included in trade payable of P company and the receivables of S company. So this is intercompany transaction. But what is this here? At the end of reporting period, 15,000 of these goods. So just understand, 50,000 worth of goods are sold by whom to whom?
By the seller to the
Yes,
By the subsidiary to parent.
parent.
Subsidiary sold the goods to parent of 50,000 at this particular, like on 20% margin. That is 20% on selling price. Leave it. We are only concerned. So there, this unrealized profit, this 10,000 will be adjusting in the retained earnings, of course, but that will be doing in the like statement of profit or loss chapter, not here. Here we are only concerned about the unsold inventory, correct? So unsold
Yes.
inventory is having how much value?
15,000.
15,000. So we'll try to find out the cost price of this. So 100 minus 20, 80, and 15,000 here. And this is how much? Can you just calculate and tell me what is the cost price of this? 15,000 into 80.
So 50,000 into 80 divided by 100 as
100. So it is 12,000.
12,000.
So the
12,000.
unrealized profit is how much?
3,000.
3,000. This will be adjusted from retained earnings of the subsidiary, correct? Because subsidiary sold the goods to parent, and this will not be considered as a realized profit. It is an unrealized profit, and this 3,000 will also will be deducted from what? Current assets, section inventory. Correct or wrong?
Sir, can you explain this once again after this 12,000, sir?
When subsidiary sold the goods to parent, they sold 50,000 worth of goods to parent,
Yes, sir.
at like 20% profit on selling price. Correct?
Yes, sir.
That profit, whatever it is there, it is 10,000. But this treatment would be given in this chapter called statement of profit or loss. When you'll be doing the next chapter, you'll be doing this. Just a second. Yeah. But in this chapter, since we are doing the statement, we are preparing the statement of financial position. We are only concerned with what? Unsold inventory. Correct or wrong?
Yes,
Hello?
sir. Closing in.
Yeah.
Yes, sir.
That is unsold or closing inventory. So that closing inventory we will be showing in the books at cost. And the why, you know the treatment, no? It is nothing but retained earnings will be debited and inventory will be credited. By how much amount? The additional amount of 3,000. Correct or wrong? Hello?
Yes, sir. Yes, sir. Got it.
Yeah, why will they be doing this? Because they cannot show the inventory at higher price. They did not sell it. Okay. And this being a unsold stock, which is in the group itself, so cannot be shown at a higher value. That you should understand. And the profit
Yes,
is
sir.
unrealized because not sold to outsiders. So this 3,000 will be adjusting. So that adjustment has been done here. Please check. See.
Yes, sir. Got it.
Yeah, so 20% of that here, and this like 22,000 is the this is the retained earnings at the end of the year, unrealized profit adjusted, and pre-acquisition retained earnings also removed. So what is the post-acquisition retained earnings? 9,000. Out of this, how much goes to parent?
80%.
This is not S company. This is P company. This is a printing error. And how much goes to the NCI?
20%.
20%. Okay. So that also will give to NCI. So NCI at fair value at the date of acquisition is this, and out of the 9,000 post acquisition profits, 20% goes to NCI. So we got the NCI value that will be shown in the liability side. Where is that? Okay, fine. Now
Yes,
current
sir.
assets. Now let's see what is the total value of current assets. Current assets like 40 plus 30, 70. 70, but they are giving 55,000. So definitely the 70,000. What will you do in like how did you get this 55,000 here?
Sir, we will deduct that unrealized amount. No, sir.
Unrealized gross. Unrealized
Which
amount will
unrealized
deduct, sir.
amount? Because
3,000.
3,000, but here they have given 55,000, no?
So 12,000 also, no, sir, purchases.
But why?
Because the cash is going out, current asset.
The cash is going out, current asset.
Yes, sir. That's what I feel.
Because they already told you in the question. They told you in the question at the same date. Please try to understand. Please try to understand. So your total of current assets is where is that? Where is that? Where is that? Where is that? Yeah, 40 and 30, 70. Okay, I'm writing it here. 70,000. Out of that, how much I should remove? That is unrealized profit. Correct or wrong?
Yes, sir.
That means that is nothing but this I need to deduct because I need to show inventory at.
Cost price.
I cannot show at 15,000. I can show it only at. I can show only at
3,000.
what 3,000?
12,000, sir. 12,000.
Are you understanding what I'm saying? You need to show the inventory at 12,000 or like 15,000.
12,000, sir.
12,000, correct. Okay. But that 12,000 is already included in this current assets, 40 and 30. because inventory they did not give you separately. But next, what they gave here is, please understand from here, at the end of reporting period, 15,000 of these goods remained unsold in the inventories of P company. So it's an unsold inventory which has to be shown at cost, correct? Which has to be shown at cost. So I'm showing at cost 12,000. At the same date, so what I need to remove from 70,000, I need to remove how much? Please tell me.
3,000 unrealized
Left
profit.
over is,
67.
all of you are following.
Yes, sir.
Yes, everyone, yes. Now, at
Yes,
the
sir.
at the same date, parent company owed to subsidiary company 12,000 for goods bought, and this debt is included in the trade payables of P company and receivables of S company. So can I remove this intercompany adjustment from current assets and current liabilities of 12,000? Please tell me.
Yes, sir.
Yes, sir.
That's it. That's it. Meghna, are you following? Hello? Hello?
Yes, sir.
Are you following, Meghna?
Yes, sir.
Can you explain me what is happening here, please?
So,
Can you explain me what is happening? What did I do? See, the current assets are how much? 40 plus 30. How much?
70.
70. Out of that, what I'm removing? The 3,000. What is this 3,000? Your inventory has to be shown at cost, correct?
Yes, sir.
Why the inventory should be shown at cost? Is it a sold inventory or unsold inventory? Can you realize that profit before selling? Hello? Hello? Hello?
So,
Meghna, are you
Yes, sir.
following? See, please understand here. Parent is selling goods. Suppose in this question, subsidiary is selling goods to parent. How much like is the value of the goods? Actually, it is 12,000. But how much the subsidiary is selling to parent the goods for?
15.
15,000. Subsidiary is selling the goods to parent for 15,000. The actual cost is 12,000. Now you tell me, is there a realized profit in this case or unrealized profit? See, the goods are sold between the parent and subsidiary is
Unrealized.
unrealized profit. So that unrealized profit you removed from retained earnings now.
Yes, sir.
The asset in the liability side, we did that adjustment from the retained earnings. From asset side also, we need to remove the higher price of that asset. Why we need to remove that 3,000? Because first of all, it's between parent and subsidiary, and this is not sold to third party, so there is no profit. Point number two is you have to show the goods at cost or you have to show at a higher value.